This is Matthew Cratter from Trader University, and today I want to talk about how Bitcoin is breaking free. This is a question I've gotten a lot. How can Bitcoin be a life raft when it's so correlated to the stock market, when it's so correlated especially to tech stocks? And we see these headlines all the time. Crypto is not a safe haven asset like gold. And I agree, crypto is not, but Bitcoin, I believe, actually is. And it's eventually going to be valued by the market as a safe haven asset. I think one way of looking at this and thinking about correlations, we could go back to the early days of the internet and compare two early e-commerce retailers, Petscom and Amazon. And these stocks used to be highly correlated, both during the run-up of the dot-com bubble and the crash of the dot-com, the crash of the dot-com bubble. But what happened is they were run by two very different individuals. One was run by Bezos, of course, and the other was basically managed by a sock puppet. At least that's the way the company appeared to be run. So what happened then? Correlations between Pets.com and Amazon broke down in, call it 2000, 2001, and one of them ended up going to zero. Now, just because something is correlated doesn't mean it remains correlated forever. And Wall Street has this odd habit of putting things into baskets, packaging things up into ETFs, writing research reports that talk about two assets as if they're very similar and should be correlated, when in fact they're not. In fact, Wall Street, when you really think about it, is probably 90% just a marketing machine rather than anything else. So it's very important to remember the fundamentals of Bitcoin. Bitcoin is not a tech stock. It's a bearer asset. A bearer asset is just something. It's an asset like gold, where if you hold it, there's no counterparty risk. No one can turn it off. It is yours just by holding it. Of course, something can be stolen, but it's very different if you're holding stocks or a money market or treasuries or something like that, because they can just be turned off by the government as well. So Bitcoin is not a tech stock. It's what's called a bearer asset. It's not equity. It's not ownership in a company like a tech stock would be. In addition, Bitcoin is completely permissionless. Tech stocks can only be bought through a broker or directly from the company itself. Bitcoin obviously does not need to be held in any sort of account, a crypto account or a brokerage account. You can withdraw it and hold it on a hardware wallet, which is really what you should be doing in times like these. In addition to being permissionless, Bitcoin also has a fixed maximum supply, and this becomes extremely relevant when comparing it to tech stocks, simply because tech companies can always issue more stock. And if they do this in a smart way, they can raise capital and grow the business, but they can also do it in a really dumb way where they dilute existing holders and the company doesn't invest the money wisely. So there's this supply difference as well between Bitcoin and tech companies. And I don't think you can name another asset besides Bitcoin that is as decentralized, as permissionless, as censorship resistant, and that cannot be diluted. Even gold can potentially be massively diluted by undersea gold discoveries or gold on asteroids, etc. In addition, gold, even though it is a bearer asset and it has done very well as a way of preserving one's savings and one's hard work over the past few thousands of years, it really is outdated technology at this point. It worked very well in the 19th century when that's all you had. But now we have a much newer technology in Bitcoin. Gold is so bulky, it's difficult to assay or verify. It's difficult to move around. You can just do the thought of experiment of trying to walk from Ukraine into Poland with a couple of bars of gold. It's just not going to happen. Very difficult to cross borders with gold, or go on an airplane, go through TSA, etc. With Bitcoin, you can do it with just 12 words stored in your brain, which is what the recovery seed is for a hardware wallet. Ben Graham, who is Warren Buffett's mentor and really inspiration, has this famous quote, I believe it's Ben Graham, where he says, in the short run, the market is a voting machine, but in the long run, the market is a weighing machine. So over the very short term, it's a little bit like a beauty contest or a vote where you're trying to find out who the most popular stock is. It might be meme stocks one day, it might be oil stocks another day. But in the long run, it's not really a popularity contest with stocks. The market, the stock market, every market is a weighing machine. And over the long term, markets do value things correctly, even though they can shoot to the upside or shoot to the downside. And so what I would say is that this correlation between the ARK ETF stocks or other tech stocks that Bitcoin has had really since March of 2020, this is more of a short-term vote, simply because Bitcoin is nothing like a tech stock. And I think the market will eventually figure this out as a weighing machine. The market as a weighing machine will begin to figure out these differences between Bitcoin and tech stocks. Here I have the correlation at the bottom here, the 90-day rolling correlations between Bitcoin and the QQQs. And we can see that for the most part, they're positively correlated. So perfect correlation would be a correlation of +1 plus 1. Completely negatively correlated would be -1. And we can see that it's at least spent a lot of its time above 0 over the past year or so. But we are seeing a tremendous divergence really in 2022, and especially in the last few days since the invasion of Ukraine started by Russia. We can see Bitcoin is the blue line here, breaking away from the orange line. It was fairly correlated. It was also underperforming tech stocks for the beginning of the year, and now is massively outperforming them. So a couple days does not make a trend. It doesn't mean that the correlations are permanently breaking down. But I think this is very hopeful, and I think the market is maybe finally beginning to understand that Bitcoin is the ultimate safe haven asset, not treasuries, not U.S. treasuries, government bonds, which have an infinite possible supply, and their yields are below the inflation rate, so it's a very bad investment. Not gold, which we've already talked about as being 19th century monetary technology, gold that's been captured by the fiat financial system, and that really is a barbarous relic compared to Bitcoin. When risk assets crash in the future, and as we're seeing now, you really should see a flight to Bitcoin as a safe haven asset. And we might be seeing the beginning of that over the past few days. Again, as I said, it's still too early to tell, but it's an important reminder. Don't value assets or investments based on the crowd and what the crowd is doing. Don't value them based on your own emotions, because certainly with Bitcoin, there are a lot of ups and downs emotionally. You need to value an asset, any asset, but especially Bitcoin, based on its fundamental characteristics. And if you're a long-term holder or hodler, these fundamental characteristics will eventually override any temporary correlations with other assets. So when you understand Bitcoin's fundamental value as a permissionless asset, as a censorship-resistant asset, as an undebasable asset because you can't print up more of it, then the volatility will no longer bother you, and you won't be misled by shifting and short-term correlations which come and go. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.